Hello, this is the chart profit video over 2 hours into the trading day on Friday 12th of May. This is from the pre-open today. We're looking at the E-mini S&P. Looking here at a previous note at the bottom here from Wednesday 3rd of May, and I'm talking about the value area low of the minor. That's a 1 month distribution for the E-mini, and the value area low comes in at 2380. That's that dashed line. I said that if the E-mini still has an upward bias, I would expect to test down into this level to be rejected. I went on to say that price acceptance of that level would be a minor negative. What was encouraging is that yesterday, Thursday, early in the session, we did see a test of that level and then immediate rejection. So I'm making the assumption that the E-mini still has an upward bias. What would be good would be to see the E-mini printing time above this level, 23.85, which is the controlling price of that distribution, and continues to be attractive. So we've seen price back to that level in today's session. I've also said that the current the minor price distribution that we're talking about here with the point of control at 23.85 looks complete or near to completion. Therefore, in the short-term time frame, it's important to monitor price relative to that point of control. So I think that 1 month distribution is near to completion, and that means we should expect on the short-term time frame a directional move that again may last a month. And a big clue relative, read the direction of that is just to monitor price relative to that 23.85. So again, further aggressive buying, that's green at the top marked above that level, would be a big positive. I don't really want to see much time spent below 23.85. And as I've said, price acceptance down here around 23.80, that means time, I think, would be a negative. So here's the current price action on half-hour chart here, and you can see we're finding support currently today, but E-mini doesn't seem that keen to move too far away from 23.85 currently. And there's the pro below that minor value area low. Looking here at the breadth indicators through Thursday, not that exciting. The bottom two indicators very close to their important levels. Rather see the net new highs 25 indicator here, the 5-day moving average, above zero. It's kind of hugging it at the moment. And the percentage stocks in my New York list at the bottom here, I'd rather see that moving up. Currently, again, it's hugging that 50% line. Just about gives us a positive here, green for breadth, but only just. Price momentum is above zero, it's positive, so trend up. Momentum is heading up, just possibly slowing down a little here. But currently there's enough green on the pulse chart to be reasonably optimistic. Sentiment indicators as well, not too exciting at the moment. This is my version of the Ridex assets ratio. We hit 14 here, which is the extreme high, only 2 readings above 14 in the entire database. That was on the high 1st of March back here. Price has been back up to test that. The ratio itself just above 10 at the moment. So if we're looking to take a kind of minor positive out of this, price has come back to retest that old high, and it hasn't caused too much excitement amongst the retail traders here. The ratio back above 14 would be, I think, probably pretty alarming from a contrarian point of view. Something similar in the data from Lipper US fund flows. They reported equity outflows this week through the 10th of May of 2.1 billion. It's not a big number, but it is an outflow. The 4-week flow is a net inflow of 2.27 billion. So again, both of these numbers here, both the flow number for this week and over 4 weeks, nowhere near extreme readings. If we see the market pushing higher and the flow numbers heading back up to that previous peak, that would be something to take note of. But currently we're down here, pretty neutral readings. And if we look at the poll numbers, public poll, the bulls percentage was actually lower this week, 32.7, down from 38.1 previous week. That was a 10-week high, mind you. Bears percent slightly higher at 30.2, but up from 29.9 previous week. That was a 12-week low. And again, something to watch for in the investors' intelligence poll if the market were to be carried higher by the current momentum. Just to watch for that 4-week moving average in black there of the investors' intelligence poll. Net figure, if we see that probing back up towards the previous high earlier in the year, again, that will be something to watch for. You probably know the VIX. I'm not going to show it now, but the VIX has been recording extremely low numbers recently. Can't really time anything off it, but extremely low numbers, indicating a real complacency among investors. It's just a little concerning right now. Okay, let's run through some charts. This is the technology sector XLK. You can see this is the leader at the moment. We are up around the highs here on this chart at the end of the week. Small caps IWM lagging, completely different looking chart. Important that the Russell 2000 holds that 16-month at 136. Price down here would be a warning of lower prices. Currently we're okay with holding it. This is the spider, the 3-month down here at 236.18, and just on a more minor time frame, which could be interesting level next week, 238.50. That's just the 2-month controlling price. Interesting at the start of next week to see if the spider can hold that level, 238.50. We'll follow that in the pre-open, that level. German Dax Index holding up very well at the end of this week. And the UK FTSE 100 had a little problem here with its 5-month at 72.95, but when we got above that earlier this week, it's really responded well. Long-term distributions suggest that anything above 7,500 for the FTSE, the kind of target level off those distributions. What would happen there if in fact that's going to be an extreme, is you would see a fast rejection from a probe above that level. FTSE's done particularly well this week. Large cap UK stock index, the pound relative to the dollar has come a little lower this week, which helps those larger stocks. In the longer time frame, as long as the pound is holding above this level, that's 124.78, the 15-month, and as long as that 15-month controlling price doesn't migrate, it's in strong price location up here. Euro FX chart found support recently at the 7-month down here. This is a strong price location relative to that 7-month, but the major is up here, 113.29. So in the very long term time frames and a weak price location below this, but in the, let's call it intermediate, it's strong. This is the dollar yen. Earlier in the week we saw it probing here above 113.61, which is the 4-month. At the end of this week, back below that level, there's the halfway point currently where we're printing from this high to this low. Price below that, 113. Dollar's back in a weak price location on this chart. So let's look at the dollar index. We know this was a target up here around 104 level in the long-term price distribution. So for weeks after that we'd look for evidence that that was some kind of major high. The 6-month emerged at 101, and then we came back up to probe that level, and there was a rejection there back down. So that's a weak price action. Dollar index remains in a weak price location here. This is GLD, the gold ETF. Surprisingly to me, it moved back into a weak price location when it fell below this area of price here, which is the halfway point from this high, and the major at 119.84 in here. So this is weak price location. We're having a little attempt at a rally at the end of this week, but unless that point of control migrates lower, this remains weak price location. I wouldn't be expecting too much from gold on the long side unless we can recover back above that level. So back above 120, let's say, would put it back in a strong location. I've been saying for a few months now that oil could become a problem for equities. This is a weak looking chart still. The major is up here at 1144, that hasn't migrated, and since we pretty down off that level back in early March, started to look like a really weak chart. We had a rally back off the halfway point from this low. We had a rally back there at that natural support, back up towards that major, and then we've fallen back down below this halfway point, and that's currently where we are. So I think this is really weak price location for oil here, and that could become more of a problem, I think. And we finish on TLT, the T-bond ETF. The level to watch at the moment is the 8-month at 121.63, and can bonds recover back above that level? This is all weak price location in here, just on while looking at it with regards to the current distribution, of which this is the point of control. In the much longer term, the major is down here at 119. Price back down here would put bonds in a really weak position. There's a possibility, though, we're seeing a strong end to this week, that we could see TLT back in a strong price location, back above 121.63, and I assume that would be a negative for equities. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.